투자를 할 때는 남들이 모르는 정보를 아는 게 중요한데요. 인공지능을 활용해 그 정보를 발굴하는 글로벌 전문가를 모셨습니다. MIT 교수님이기도 한 로베코 자산운용의 마이크 천 헤드입니다. Thank you for joining us, Mr. Chen.
Thank you for having me.
I want to start with your career path and background.
Okay.
Yeah. Tell me about your story and what's your job in Robeco?
Yeah, great question. So maybe I'll take you to more than 20 years ago, chronologically forward. So I graduated with a PhD in electrical engineering, really more mathematics than anything, right? So I learned a lot of mathematics, stochastic calculus, probability, all that stuff. And my PhD training was rather theoretical, so there were not a lot of practical jobs available, right? So a few options are, academia, right? But turns out that when I was, looking for a job, that was in the mid-2000s, the noughties, the 2004 05 time frame. Wall Street obviously was going very strongly, right? And derivatives was the big thing. So I thought, hey, maybe I can give this thing a shot. Hopefully it'll make some coin as well, because when you're a grad student, you don't have any money. So I joined Wall Street, and I joined Morgan Stanley actually as a fixed income quant on the sell side. I built a model back then, and there was a lot of derivatives trading back then, and the head trader of the desk said, hey, why don't you come join us? Since you built a model that was helping us price and hedge these securities anyway, why don't you just come directly and work for us? Right? I said, again, I was like, wow, that sounds exciting. I want to do this, and then if I do this well, maybe 5 to 10 years from now I'll be set, right? And I can do whatever I want. This was 2007 when I joined when I joined the trading desk, and obviously we all knew what happened in 2008.
Yeah.
Right. So suddenly the world looked very, very different. I realized I still very much like finance. Actually, to be honest with you, I got into finance because I could do it, right? But later on, I found out I actually like it. It's really, really interesting, right? It's a big puzzle you're trying to solve. But I was trying to learn how, not just from a sell side perspective, from a transactional perspective, but from more of an investment perspective. So I started, the world was in a very difficult place in 2009, 2010 time frame. I tried to see if I can transition, and turns out that one place that was hiring was Google, down in Silicon Valley in California. So going from the East Coast to West Coast, and Google, as you're probably aware, have a lot of money, right? It's a cash machine, and they wanted somebody to look after their cash. And maybe get some investment return on top of it. So I joined Google's Treasury Department, the quant guy in the Treasury Department, and that was fine, right? Google was a great place to work. I'm sure you've seen the movie where there's a lot of benefits and free food, all the food you can eat, right? I was getting a little bit bored at Google.
They have PlayStation.
They do. But I was getting a little bit bored. Yeah. So I thought, well, what can I do? And that was in the San Francisco area, and I just 2012 time frame. And I saw an ad. There's this unit at BlackRock, right? That is looking for somebody with a quantitative background, a graduate degree, that can program, that has some market experience, and advanced degrees in STEM field, right? Science, technology, type of engineering and mathematics field. So I kind of check all these boxes. So I thought, okay, well, if nothing for nothing, I'll just throw my resume in and see what happens. You never get a job through these, blind submission of resume, right? Usually you go through headhunters or friend of a friend or whatever. But I did that, and they called me back. And turned out that I was very lucky. This is the scientific active equity unit, now called systematic active equity. And they were one of the founding members of this whole quantitative investment field. So I started, I was always a quant, right? I always had a pretty mathematical bent, but I started as a fixed income sell side guy. And through this various circular path, I ended up in buy side quantitative equity. So, it's pretty different from where I started. But it turns out that I really like it, right? And one of the first things that I looked into when I started was back then accounting accounting professor and accounting methods were the hot thing, right? And we had a lot of accounting professors that actually worked for SAE. I actually never took a single finance class in my life. So I was like, okay, I can't do this. I can't do accounting better than they can do accounting. There's no way. So I thought, what can I do? And one of the things I noticed when I was at Google was that, Google really tried to treat its employees well, right? Tried to, give them massages, give them free food, very nice benefits. And you think about it for a minute, it actually makes a lot of sense because Google doesn't have a lot of assets, right? Besides it doesn't have really any fixed assets really, right? Its biggest asset is employee. I know it's cliche, but its biggest assets are its IP, which are created by employees. So they did a lot to try to make employee happy, engaged, stay at work, right? And so they can do more code and do more development. So I thought, hey, maybe employee happiness or employee satisfaction could be a way to look at it. And then I thought about, well, what are some of the things I can use to measure whether company A has happier employees versus company B? There's this website called Glassdoor, which is still around, by the way. But 12, 13 years ago, this was in 2013 timeframe, and it was relatively unknown back then, and we called up Glassdoor, and actually they just say, okay, you want our data? Okay, here it is for free, and we don't know what do you want to do with it? I don't know, maybe there's something to do with investment. Really, really early days. So we got their data, me and a few others at SAE, we built a signal. It turned out to work really well, and it's kind of novel, right? We got some recognition for it, and then I just kind of gone down this path. Maybe I can use these newer data in conjunction with more advanced analytical techniques, trying to get insights into the companies that we invest in, apart from the more traditional financial data.
How did you analyze that employees' happiness?
Very good question. So, as I mentioned, right, the idea was that because I observed at Google that Google really tried to do a lot to make sure their employees stay relatively engaged, relatively happy. And it's also a competitive edge, right? Silicon Valley, in order to attract good people, salary is important, stock options are important, but also these kind of benefits, right? But the idea was that, hey, if Google, very successful commercial organization, is spending all this money and effort in trying to make sure the employees are happy with the company, there must be an economic reason behind it, right? And you think, well, maybe employee happiness could lead to higher productivity, which ultimately lead to higher security returns. So you start with an idea, right? And this is actually something that I still try to do to this day. When you do a research, when you have an investment thesis, you start with an idea, right? Once you have an idea, and then we follow what's called a scientific method. So you have an idea, what's called a hypothesis, and then you go collect the data, which you can use to help you either verify or refute this idea.
So do happy employees always get shareholders higher return?
Yeah, so always is a very strong word, right? We run what is called a multi-factor model. And we look at, which means that for any given security that we try to buy, we look at it from many, many different angles. So you obviously have the usual financial angles, right? Is the company profitable? Is the company, growing its revenues, right? You can, employee sentiment, whether the company have very satisfied or disgruntled employee, that's another aspect, right? You can look at it from a market perspective. Do the market view the company favorably? Analysts, for example, do analysts view the company favorably or disfavorably? Everything together, we arrive at a final score, what we call the score for a given company. So employee sentiment is certainly one component in there, right? And we find that over a period of time, over a reasonable investment period of time, having that signal or having that perspective in our alpha model contribute to the better performance of our alpha model.
So beside the employee sentiment, what other things do you analyze for alpha?
Well, I can't get into specifics, of course, but it's actually any and everything, right? Anything from financials, for example, what is market view of the given company, to whether the companies are productive, right? Whether their warehouses are full, you can get such information from satellite image. If you're analyzing retail companies, you can track the cell phone of IP address of people going in and out to see if there's a lot of traffic in their retail store. Really, I mean, we live in a very exciting time. We're just awash in data, right? So actually, that's not a problem. The problem is actually coming up with the right investment hypothesis. Go back to the earlier point. There's too much data out there. Actually, if you blindly chase every single data, most of it will just be noise. So what we're trying to do is that every time we have every time we use the data, we want to make sure we have an idea how to use it first. Then we go to the data.
So what kind of idea or hypothesis that you have these days that you want to prove, that you want to see it's true or not?
We have more ideas than we have time for, right? But one thing that's really, really interesting to us these days is how do you use generative AI for alpha, right? Generative AI, as I'm sure you're aware,
I'm a big fan of ChatGPT.
Yes, yes, all of us are. It's a huge productivity booster. But in addition to boosting productivity, can you actually use it to find new investment angles, right? That it may be a possibility. There's some academic papers that claim it can. We are experimenting with it, but it is something that to be honest with you, I don't believe we're the only one. I'm sure a lot of other houses are also investigating whether they can use it for if nothing else, idea generation, right? We're looking to see if it can help us improve our investment process.
Well, I use my ChatGPT for my golf swing. So I asked GPT that, how do I play better golf? And I never asked that question about how do I find a good investment. Yeah. So do you ask questions like this?
I think that's a bit too broad, right? I think with generative AI, you need to basically be more specific and develop a what's called chain of thoughts type of a series of prompt, right? What we're trying to do is trying to develop more chain of thought. In fact, actually, we're trying to now use more what's called retrieval augmented generation (RAG), trying to see, feed it with data and then along with chain of thoughts to see if we can actually ask more specific investment ideas and see if it can come up with it. Yeah.
Generative AI is about the natural language. And do you also analyze other things like images or videos?
We had worked on actually I have worked on video image analysis, right? The canonical parking lot example. Those kind of data we don't use at the moment. We find that tends to be commoditized very quickly. But we do use audio information to help us analyze underlying sentiments and emotions of speakers besides just the word that they say, but how they say it. So in that sense, we actually have multimodal inputs into our alpha model.
So you collected all the voices from the earnings call and analyze those things?
Correct.
So you must have a busy month.
Well, I didn't have a busy month. Our algorithm had a busy month, yeah. But yes, that's right.
So what kind of investment do you really focus on? Do you usually focus on U.S. stocks or?
A great question. So Robeco is a global asset manager. We're Netherlands-based, right? And we've been around 96 years. But we invest globally, and we actually have offices globally. So for our team in particular, we are quantitative equity, and we have a 80 billion plus euro in asset, and we invest globally. So emerging market, developed market, North America, Europe, Asia, everywhere, really.
I have a question for the natural language processing. So Mr. Trump and other world leaders, sometimes they speak fiercely to each other. So can you just analyze this sentiment and put it to investment and things like that?
So obviously it's a great question. It's a great question and very timely and topical. I can't comment on one individual in particular, right? But our algorithms do analyze the sentiment conveyed, by market participants, positive or negative. I think in the case of the current regime, right? I think there's a lot of rhetorics, obviously, but I think that might again, I think that could just be a negotiation tactic.
So you just don't analyze the English. You also analyze Chinese.
Correct. That is correct. We analyze multiple languages, actually. Actually, one of the things that's interesting, right? So first of all, NLP is really powerful in that it allows you to analyze multiple languages. We're in Korea right now. I don't speak Korean, but we actually have Korean language model that can analyze Korean management conversation and tell us whether the management is positive or negative, right? For the company's outlook, for example. But even more than that, I think what's really interesting is that there are a lot of nuances in language. Analyze a conversation in its original language versus analyzing the conversation on the translated language. You actually get different information.
Yeah.
Complementary, but different because there's so much contextual information around language that you actually, when you do this translation, you pick up different things. So that's actually what we do, right? Actually, as an example, so for Chinese text, we analyze it in the original Chinese NLP engine, but we also translate it into English and then apply English NLP engine to it. And then we marry the two. Actually, it turns out that the results are even stronger.
That's interesting. Yeah. Do you find it's useful to use this algorithm when it comes to manage these risks related to like policies and political events?
Yeah. Policy is hard.
Yeah.
To be honest with you, policy is hard. As I mentioned, there's a lot of rhetorics, by all political leaders, right? And not just U.S., but kind of just around the world. And these policies also tend to shift very quickly, as we are experiencing, right? So, we obviously these policies do filter into sentiment, and then we do pick them up. But in general, it's really quite challenging, to be honest with you. Because of the quick changing and unpredictable nature. What we do, though, I think with Quant, that's really, really helpful with managing the risk involved is we really know the exposure, right? That's what we do, Quant, by definition, right? We measure things, we quantify things. So we're able to measure the various kinds of risks a given security and group of security, i.e. a portfolio has. And once you measure that, you can control it, right? You can only control what you can measure, right? So we measure it, we control it, and we generally run a fairly balanced exposure. So any given market condition, we are likely not to suffer too big of a drawdown. And so far, it's been a pretty volatile year in the world of financial markets. Our portfolios have done relatively well. We've sailed through it so far relatively unscathed.
Well, there's high volatility, and I do invest in U.S. stocks and Korean stocks, and I'm tired of this volatility. and I heard that quantitative strategies, there's less downside risk, right? So
I would say there's less downside risk, but we're better able to measure it.
Measure
and once you
it,
can measure it, you can control it.
So if there's a good human manager and algorithm there, so if to have to compete for the and which one is better in this kind of volatile market condition?
My personal opinion, okay, I think the approaches are very different, right? I think humans will always have an edge in able to kind of into what may happen or what's likely to happen and how they should react when something new happens and they haven't seen before. Humans have that intuition about them, right? Quant, on the other hand, it's like an AI, right? It only knows what's been trained on, right? So quant algorithm left to itself really do not react well when they're new situation it hasn't seen. Having said that, quant managers actually have we have actually human overlays, right? Our portfolio managers, very skilled market participants, they know how to react. For example, when the Russian-Ukraine war broke out, right? They were able to react very quickly and address the issues there. Nobody knows what's going to break out, right? At least nobody really know if the war was going to happen until it did. So we have human manager on top of that, and you know, really helping us to control it. So quant and humans, they have complementary strength. I think what quant is really good at, as I mentioned earlier, is that quant is able to measure exposures that sometimes, you know, might not be obvious to a human manager, right? So for example, human manager might hold a given set of stocks, but it could be really over perhaps a comfortable level in terms of, for example, momentum characteristics, right? And momentums are, you know, it works until it doesn't. They're likely to crash. So they might not realize that, well, with this much momentum exposure, when momentum crashes, it could be quite detrimental to you. So for us, we're able to measure those and thereby set appropriate risk limits, resulting in a more well-behaved portfolio.
But still, the quant strategy is, they have weakness in predicting this black swan and tail risk, right? So you really need a good human managers and
That's
algorithm.
right. That's actually right. And we, I think at the end of the day, you cannot outsource your fiduciary responsibility to algorithm, right? Because, you know, as asset manager, we do have that responsibility to our investors, and you cannot go to investors and say, well, you know, hey, sorry you lost so much money, but hey, you know, it's the algorithm. That doesn't work, right? So at the end of the day, we're responsible. Humans are responsible. Our portfolio management, our portfolio managers, our researchers, collectively, we're responsible. So yeah, at the end of the day, you know, I'm a firm believer still you need human in the loop. No matter how advanced algorithms are, you need humans, because humans do have that intuition and hopefully sensibility as well, right? To make sure the algorithm doesn't go haywire.
So what's the size of the asset under management in Robeco?
So Robeco as a whole, we have about 200 billion. And roughly about half of that is fundamental, and half of that is quant. So we're a very well balanced house, and I think somewhat unique among quant managers, because most quant managers are either fully quant or quant is a smaller part of a much bigger organization, right? Whereas we are actually rough half and half, and one of the benefit of that is we're able to leverage our human, fundamental managers' insight as well, and there's a lot of bilateral exchange of ideas, technology, information, so on and so forth, between the fundamental side of the house and the quantitative side of the house.
So what are advantages of the quantitative side of the Robeco compared to other managers, asset managers? Like,
yeah, well, first of all, we're all maybe you can call us nerds. We're all very we're all very aware of the latest technology. Right, so we knew that actually we knew about generative AI before it became public awareness, and we actually built apps based on ChatGPT, GPT 3.5 before ChatGPT came out, and so we're very technologically competent. We're able to keep on trying to apply the latest technology for our investment purpose, right, and also be aware of all the various data that's out there. So I think that is an advantage. I think having a very sizable quant operation compared to an asset manager without such.
So I heard that you teach students in MIT.
Yeah, I started teaching last year. Yeah, it's been a lot of fun.
Well, what do you teach?
I teach this actually. I teach NLP for finance.
What's going to be the future of this NLP for finance and quant for finance? I think because you're teaching students, and maybe students have questions about what's going to be future of the finance, right?
Yeah. So I think we're at a very interesting. That's a great question, Yang. I think we're at a very interesting point in technological evolution, right? As you can see now, our life is just dominated by technology, right? You're using NLP, obviously now you know, right? Because you use ChatGPT. But even before ChatGPT came out, when you have these auto spell, I know they're really annoying, right? Because sometimes they auto complete the wrong words, but that's NLP, right? When you have these spams in your email inbox and then that gets filtered out and goes into a trash folder, that's NLP. So technology is pervasive in our daily lives. Right, and technology can enable so many things that previously it was more difficult to or impossible to do, and finance is not an exception. Right, I can tell you for a fact that the students that I teach are very excited about this area. maybe it's a little bit of a selection bias as well, just to be super honest, right? Because they chose this course, so they should be excited about it. But I think generally speaking, I think technology is going to have a huge impact in finance, and will continue to do so. You can just see, right, the technology, the stuff that technology is enabling us to do now versus what it enabled us to do 10 years ago versus what it enabled us to do 20 years ago. It's nights and days, right? Personally, I've been involved in quantitative finance for, quant equity in particular for about more than a dozen years. And I've seen 4 generations of NLP already, beginning with bag of words, right? Which is quite rudimentary these days, but when it first came out, we're like, wow, that's really cool. To rudimentary embedding, to transformer, now to generative model. 12 short years. You've gone through 4 generations of technology already, right? So now, just imagine what is going to happen in the next 5 years, in the next 10 years. So I would say that I think technology is going to be is important. It's going to become ever more important, and it's almost becoming like reading, writing, and basic arithmetic these days, utilizing AI. Again, also the benefit of this is that in order to use AI now, you don't need to spin up a ID, right? Integrated development environment. Start writing code. You can and you should.
Yeah.
But if you want to use it, it could be as simple as just talking to it, right?
Yep.
Natural language. So yeah, it's really exciting. I think there's going to be a lot more progress that we're going to see in the next 5 to 10 years.
Do you think that quant strategy is going to be get bigger pie when it comes to
I honestly believe so. Just because of this secular technological tailwind. Honestly, it's like every day the algorithms are becoming more capable, more powerful. There's also a downside to it, right? Obviously, you cannot trust it. I mentioned earlier that you need to have human in the loop, right? Even though this thing seems intelligent, seems really powerful, at the end of the day, you're still responsible. You, human, are still responsible to your client's asset and their return, right? You cannot basically absolve this responsibility and say, okay, well, the algorithm take care of it. So you are ultimately responsible, but you need to use it in a sensible way to help your client generate return. I think that's the name of the game here.
Thank you for joining us, Mr. Chen.
Thank you for having me. It's a great pleasure.
Yeah, thank you.
매일 돈을 쓰는데 그 가치는 누가 정할까요? 정답은 슈퍼달러 슈퍼리치에 있습니다. 복잡한 공식은 빼고 투자 타이밍을 잡는 환율의 핵심만 담았습니다. 빠르게 변화하는 금융시장, 그 중심엔 언제나 환율이 있습니다. 오늘부터 환율과 썸 타볼까요?